Good morning. Welcome to this morning update from Phoenix Blue on Friday the 20th of May. I'm Tom Colley and I'll be taking a look at the markets and the news with you this morning. First to say, what a great week for trading. We've had a tough few weeks, particularly through the back end of March and what have you this week. It's been a truly great week. The best day was Wednesday. We had some proper follow through in the markets and made some real money and a string of winning trades, and that coincided with our protege boot camp. So we had all the team round the table taking the same trades, and as I say, a really good week. Okay, before I go over to the news, some other news really. If you're interested in what we do here at Phoenix Blue, 2 weeks today on Friday the 3rd of June, we'll be at the London Forex Expo, which is at the Grange Tower Bridge Hotel. Again, that's 2 weeks on Friday the 3rd of June. If you want to register for that event, go to their website, which is londonforexexpo.co.uk. Mark Owen and Nishal Patel will be speaking there. You'll also have the chance to actually speak to them directly on the stand. So a date for your diaries. Please come along, say hello, and have a chat about what we do and see whether that might work for you. Okay, over to the news in the last 24 hours. The pound, 9:30 yesterday, we had the retail sales that came in really positively. This gave an additional push on the pound strength side, which had already come from the previous day when we had the Brexit poll. Which suggested that the opinion poll was 55% in favour of staying in the EU and only 37% for leaving the EU. And that created really a lot of the market strength, or the pound strength, that gave us some lovely trades on Wednesday when we were in the boot camp. Yesterday we also had unemployment claims from the States coming in near enough on forecast, but the Philly Fed Manufacturing Index disappointing, coming in under. What have we got today? Well, the G7 meetings start today and go on into Saturday tomorrow. Other than that, just core CPI and core retail sales for the Canadian dollar. So a quiet day today, potentially likely to see profit taking and pullbacks. So a day to potentially sit on this week's winnings and wait for the new week without taking any risks with that hard-earned capital. Okay, over to the Far East. This is the Shanghai Composite. I'm looking at the weekly here. It's the end of their week. Obviously, their overnight session last night was their Friday. We can see basically we've had a doji week. We're down at this significant level here. Price is holding at this moment in time. This is the significant low below it. We haven't been lower than that this year. But clearly, having had some optimism as price rose through this area here, we're now back down into the bearish picture. Certainly, if we break below that level, this could just be a pullback, and we could see a move long in that direction. But recently, the data coming out of China has been disappointing, following a couple of weeks of positive data. Alongside that here we've got the US dollar Chinese yuan. This is basically a controlled exchange rate by the government. We can see we're in a bullish channel here, which is devaluation of the yuan relative to the dollar. This I've seen as a significant level. This is the level following a G7 meeting at the back end of last year that appeared to be a level that the Chinese were respecting, having agreed not to aggressively devalue the yuan going forward. There it isn't a specific agreement, it's a general agreement, so open to interpretation. But what we can see here is the Chinese devaluing their currency in the light of recent poor data, looking to stimulate their economy, which is export driven. Over on the Nikkei, well, this is the weekly again. We're very much in this consolidation of a long-term triangle there. We've had a bullish week this week, but again, we're not going to see anything significant until we break either above or below that triangle. Bear in mind this is a weekly chart, so that's a significant level or a significant distance before one of those levels could be broken. Over on the US dollar, well, we've had a bullish week. That's clearly obvious there. We had the FOMC meeting minutes out on Wednesday night, was it? Yes, Wednesday night. They were very much more hawkish than the feedback that came at the time of the actual meeting. The looks as if potentially June, if not July, rate increases certainly up for discussion now. It's always subject to data, but a strong chance of a rate increase on the dollar now if and when, or if we see strong data coming through over the next couple of weeks. Crude oil, well, we had a pullback in crude oil yesterday. We traded this market short. We took profits at our T1 target. We'll have our stops at break even. We'll have now been stopped out on the second part of that trade, which we had no risk on. The nature of this trade was there is negative information coming out of Nigeria where there has been militant violence, which has potentially stopped oil reaching distribution plants and things like that. So that's probably significant in that there. We've got a level of $50, which is a really, really significant level coming up shortly. I had a look at this morning. I would expect certainly some sort of pullback from that, maybe just back down to the bottom of this channel I've got marked here. But having said that, the last time it was up around 50, it didn't respect it 50 exactly, and there isn't a particularly sharp level there. So potentially, unless something changes, not something I can see worth the risk of trading at this moment in time. Over on the S&P, well, we've had some nice trades in this, including Wednesday this week, when we traded it down and then back up again. Last time we traded down from here. We've been down from here, taking profits again. Yesterday we had a big test of this what we call 2040 level. Obviously that level has been respected again, although price came really strongly below it. The buyers came back in and pushed the market back up. You can see I have an order here at this level on a retest of the channel here, and a really quite significant nice level through there. So again, we'll be looking for the trade short to 2040. That's my first target. I'll take money off there. I'll move stops to break even. But I have a second target down here that I'll be watching price action at this level. Should there be any sign of a break below this, I'll hold the trade, but I'm willing to allow price to come back to me to some extent before killing that trade, because clearly there's a big move down here, and that level is even more significant. If we do see anything below that, we're definitely going down to this level again. So if we see a rate rise from the Fed, that's all a possibility. So we are very much bearish this market, and we'll be playing it in that manner. Over on gold and silver, well, you might think that it's a bit of a contrast that we're looking to be short in these markets at the same time as being short on the S&P. Bearing in mind, short on the S&P means risk off, and short in gold and silver would normally mean risk on. But we have COT extremes, extremely high COT extremes at this level. So that tells us that the market needs some sort of pullback. So we are actually trading silver rather than gold. The reason being is the relative price of silver to gold is at the highest level it has been recently, so we potentially see a bigger move in silver than in gold. And if you look at yesterday's bar, that somewhat reflected a much more bearish bar in silver than we saw in gold, although we are retesting the level, so it's not to say that that still won't be a bearish move. We've another order here to add in, but at the point this slide was taken, not necessarily looking as if that add-in opportunity will actually arise. We'll potentially just see further downside. That's not a problem. We're already in the trade. We'll be looking for another level to add in on that at a later stage. We're also short the Aussie. We've been short this since this level here. Our stops at break even. We got in at this bar here. That pull back further than we thought on some positive Aussie news on Monday night, I believe. But now we had a nice move through here on Wednesday. We're stalling a bit at the moment. We've had profits out of this market. Stops are at break even. We effectively, so we've got no risk on the table. And looking for further downside, and we'll be looking for another opportunity to add in next week if we get that follow through. Now, what you've been looking at here is what we call our pure analysis. We call it pure because we use clean charts and we only use price action and horizontal levels. We don't use any lagging indicators on our pure analysis system. We do use it on our flow system. We buy and sell with the institutions, who are the one who moves the markets. We trade with a fundamental bias. One of our specialties is analysing the commitments of traders report. You will have just heard what I said about gold and silver, where we can have a view on the market which can be contrary to expectation based on the signals we get from this market, but still be lining up with our overall fundamental bias. We also take into account seasonal analysis. All this allows us to be very accurate in placing our orders, so we use 40 pip stop losses on FX majors. This means you can be more profitable with a smaller number of winners. Now, if you want to improve your results by only taking trades when the probability is highest, you've got any questions, please visit our website www.phoenixblue.co.uk, or simply send us an email to info@phoenixblue.co.uk. Either of those places you can leave a request to come on our next free workshop, which will be in about 4 weeks' time in London. So don't hesitate to contact us. We'll invite you down there, and we can show you exactly how we may be able to take your trading to the next level. Okay, that brings the morning updates to the end for this week. It's been a great trading week. Have a good weekend. Get your analysis done over the weekend, and let's look forward to another great week next week. Thank you. Goodbye.